Back here at home, the local economy rebounded in the first quarter this year on the back of greater private spending. Our Lee Soo-jin has more on the latest figures.
South Korea's economy grew in the first quarter of this year compared to the previous quarter, despite the downturn in the global economy. Data from the Bank of Korea released on Tuesday shows that the country's gross domestic product, adjusted for inflation, is estimated to have risen 0.3% on quarter during the January to March period of this year. This is a turnaround from the contraction recorded in the fourth quarter of last year. This means the country avoided going into recession, which is typically defined as 2 consecutive quarters of economic contraction. The country's GDP had been growing since the third quarter of 2020 before contracting in the fourth quarter of last year due to plunging exports, a key driver of the Korean economy. The central bank attributed the growth in the first quarter to a recovery in private consumption. Private consumption rose by 0.5% thanks to an increase in spending on recreational activities, restaurants, and accommodation. Investment in construction also increased by 0.2%. Facility investment, on the other hand, shrank 4% as demand for semiconductor equipment and machinery dropped. Meanwhile, South Korea's gross national income, the total amount of money earned by people and businesses, also rose 0.8% as prices of major imported goods, such as natural gas, fell. The Bank of Korea hinted that it may adjust downward its 2023 economic growth projection, currently at 1.6%.
As of now, the annual growth projection is likely to be revised down slightly due to uncertainties surrounding the recovery in the IT sector and the delayed economic impact from China's reopening.
The nation has seen an on-year decline in outbound shipments since October last year due to the ongoing slump in the semiconductor industry and has logged a trade deficit since March last year. Lee Soo-jin, Arirang News.